Hey guys, we are back again with yet another video, and this time around we are covering a topic which is very hot in the market and which everyone wants to know about. And the topic is Bitcoin. So before we move forward, let me give you a caution statement. Investment in crypto is very risky, and I would recommend you consult your financial advisor before investing any money in crypto market. And here I also want to give a declaration that I will not be responsible for any of your investment decisions or any losses that you might incur while investing in crypto market. So let's get started with the content of Bitcoin market.
Before we start with the content, let's have a look at the financial performance which Bitcoin has given in the past few years. So, here you can see in 2010 the price of Bitcoin was around 6 cents, and in 2011 the price of Bitcoin went to $13.84, which was approximately a 23,000% return on the first year itself. As we move forward in 2012, the price of one Bitcoin was $7.42, which means it nearly lost half of the growth that it had in the previous years. And in 2013, the price of Bitcoin went to $945, which means an incredible return of 12,645%. Moving forward to the next years, in 2014-15, Bitcoin lost majorly 76% of its value, and the price of Bitcoin fall to 224.26. It was because of the Mt. Gox exchange hack. In 2016, the price of the Bitcoin recovered, and the value of one Bitcoin was equivalent to $1,030, and the return was around 360% in 2016. Considering 2017, it was a very good year for Bitcoin. The price of Bitcoin rose 17,550. Year on year return was 1600%. But in 2018, again, Bitcoin lost half of the values, and the price of one Bitcoin now at the time of making the video is somewhere around $8,000. Considering all these factors, if you would have invested $100 in 2010, your $100 would now be $29 million.
Let me just jump in here with one interesting fact about Bitcoin. In year 2010, one developer has spent somewhere around 10,000 Bitcoin to buy two pizzas. And in 2017, they were worth somewhere around 20 million.
It should have been worth the taste, don't you think so? $20 million worth of pizza?
So let's move on to our presentation. So in this presentation, we are going to cover about what is the Bitcoin and why it's so popular, how we can acquire the Bitcoin, and what can you do with the Bitcoin after you purchase. We also going to talk about the risk associated with Bitcoin investment and about the taxability of crypto, including the Bitcoins.
The purpose of Bitcoin was to create a decentralized currency which is not dependent on any economies of the world and whose value do not depreciate over a period of time. In Bitcoin, everyone is a part of the network, including you, me, and the miners. And everyone is responsible to ensure that the network remains up and running. So why Bitcoin is popular? As you have seen in the past, the incredible returns that Bitcoin has given us, every youth is after this cryptocurrency. The supply of Bitcoin is limited to 21 million as compared to the government currency which the government keeps on printing every year, and that's why the value of the currency, the government currency, keeps on decreasing.
So now the question arises how we can acquire the Bitcoin. So for acquiring Bitcoin, we have got multiple marketplaces which are called the Bitcoin exchanges. These Bitcoin exchanges allows people to put in their fiat currency and you can buy the Bitcoins from these markets. So one of the leading Bitcoin exchange is Coinbase, but Coinbase also had got competitors like Bitstamp and Bitfinex. So after acquiring your Bitcoin, the question arises what you can do with your Bitcoin. So with your Bitcoin, you can pay your bills, you can buy drugs as well. So you can also secretly store your money just like a Swiss bank account.
So let's talk about some risk associated with Bitcoin and other cryptocurrencies. They are extremely volatile. Since Bitcoin is a decentralized currency, once you have executed your transactions, it cannot be reversed. Bitcoin is a digital currency, so it is subject to hacks. Nearly $2 billion have been stolen in the last 2 years. At the moment, there is no regulations in place for cryptocurrencies, and when you are making your investment in cryptocurrency, you have to ensure that you do your due diligence. Otherwise, you can fall and prey for scams like BitConnect.
Hey, hey, hey. Hey, hey, hey. Hey, hey, hey. What's up, Bitcoin?
So at the moment of creating this presentation, there are somewhere around 1,542 cryptocurrencies in the market, and every day 3 new currencies are hitting the market on daily basis.
So now moving on to the taxing part of the Bitcoin. Bitcoin is considered as a capital asset, and any gain or loss that you make on Bitcoin is considered as a capital gain or a capital loss. This regulation is applicable in most of the countries. However, please consult your tax agent before preparing your tax return. If you convert one cryptocurrency to other cryptocurrency, it would still be considered as a capital gain transaction, which means if you convert 1 Bitcoin into 20 Ethereums, you will have to pay capital gain. If you convert 20 Ethereum back to 200 Litecoin, then again you'll have to pay capital gain, which essentially means that if you are transferring your money from crypto to crypto and you are not converting it back to fiat, still you will have to pay capital gain tax on that. We do believe that only 1 to 2% people of the world know about blockchain technology, and we firmly believe that blockchain technology is here to stay. However, please do your due diligence and research before investing in any cryptocurrencies, as we will not be responsible for any losses.
So guys, before we end up the video, let me just request you to hit the like button and subscribe button. And if you want to ask any question, please do comment down below, and we'll be answering the question very soon. And if you want more content on Bitcoin or any other cryptocurrency, please write down below in the comment section and we'll get back to you.